Hi, this is Greg Kilpack of Market Timing University, and one of my subscribers on YouTube asked the question regarding Cisco systems. Can you do an analysis of Cisco systems? I'm planning on buying in around the current price, which is around $21.50, with a price target of $23, willing to hold until the year's end. Well, let's take a look at that. Now, this would qualify not as an investment, but more of a short-term trade. So let's take a look at that. This is the big picture 5-year chart of Cisco systems, which I'm not too concerned about for such a short trade. So let's go to a 6-month chart. Now, Cisco was trending up earlier 6 months ago for the first 3 months there. In the last 3 months, bad news must have hit right about there, and it trended down after that. Okay, so then last week on Wednesday, after the close, some bad news must have come out, because the next day, Thursday morning, the stock gapped down all the way to $21 a share from 24 right there. So let's take a look at this. Let's try to find the news and see what happened. Well, I did that, and here's what I found out. Cisco tumbles on weak earnings guidance. Here's what everyone is saying. Well, a company has the right to give investors an idea of what they're seeing before they actually release earnings in their official quarterly accounting statement that they are required to release. And so the company did do that. They gave guidance, which they're allowed to do anytime they want to. And this is what they said. Cisco provided investors and traders with an outlook that fell below expectations. The company said they expect sales to decline 8 to 10% on an annual basis. Well, let's see what some people are saying about that going down here. Wow, terrible guidance for Cisco. Cisco Chambers has been giving bad guidance since the late 90s, so I never owned the stock anymore. It got stuck in the mud so many times. That's interesting. Well, that was quite the dud. Cisco, they were essentially just a dividend income investment. Okay, good, interesting. Let's go back and take a look at this. Now, here's something that you need to know about short-term trading. With trading, the financials don't mean anything. I don't care the long-term, prospects for this stock. All I want to do is read this chart to try to determine short-term demand and supply for this stock. And here's what I found. There's a saying that I don't have 200 stock analysts working for me. That's the bad news. The good news is I don't have to, because all the big firms on Wall Street who control so much money, they do. And so this is what the chart shows, what they're thinking and what they're voting with their money based on this chart here. And we see that the stock price went way down, but that green candle means the stock price went up all that day on Thursday. And then there's a little blip right there, I think is Friday, where it looks like it's green and it went up a little more. Let's verify that. Let's go to a 5-day chart. Okay, there's the big gap down. That might not seem big, but it is. That's like 24 to 21, $3 a share. That's about, what is that, 15% drop? That's pretty big. Okay, now you can see that the stock climbed most of the day and went up a little more on Friday. So far this is looking pretty good. So let's go back and set up the trade. Now what I would do if I was going to trade this, it's currently at $21.50, and my subscriber said he wants to buy and hold till 23. Well, let's see if that's a good idea. If I was going to bother with this trade at all, I would probably want to hold it to at least $23.50, if not 24, and then sell. So I would want to put my stop around $20.50. So you're going to risk about $1 per share in order to make what? $21.50, $1, $2, $2.50 per share. About 2.5 to 1 on the reward to risk ratio. That's okay. It's not great, but do I think that's going to happen in a month? No, I really don't. 6 weeks until the end of the year? I doubt that's going to happen. I think you're going to have to hold on to this 3 to 6 months, really, for that to happen. So first off, you're going to be in for a longer term trade, I think, than what you're thinking about. Second off, the reward to risk ratio is decent, so that's doable if you're willing to hold on longer than you were planning on. It's not my favorite trade based on the setup, based on bad news. There's a very good chance, I think, that this stock is going to flop around sideways around $21 to $22 a share. If I don't see some steadily trending starting to head up, I don't think I would want to hold on to this trade for very long if I got into it. So just a little information for you on what's going on with this stock. Okay, if you want to email me with any questions, you're welcome to do so. Here's my email address, and be sure to go to my website, markettiminguniversity.com. Sign up for my freebies, read my blog to stay in tune with the market, and get my free report, which reveals 3 things that every investor must know to earn greater profits, take less risk, and invest with confidence. This is Greg Kilpack, and I hope that helped you. Hope you have a great day.